Katie Stockton, Fairlead Strategies founder and managing partner and a CNBC contributor. You're just the person I could ask. Have you compiled statistics on people correctly calling bubbles? And is it above 0% for people being right, at least immediately? It's never happened in the history of the world, has it?
It's like a bubble of people calling bubbles, right?
That's right. It is.
So
which means it isn't. It means it's not going to pop anytime soon, probably, right?
But it does feel like as of Friday, we had a sentiment shift that is notable. What we had been watching for on the VIX was a move above resistance around 18. And of course, we did go decisively above that, also cleared the 200-day moving average. And that usually does preclude or sort of predict an increase in volatility for maybe up to 3 weeks or so. And so that's what we're bracing for. We did see enough follow through Monday and today to suggest that that is underway. So we think this is really the first meaningful pullback for the S&P 500 and more broadly since the April low, and that it's something that buyers will ultimately welcome, but we're going to wait until we have positive technical catalysts to act upon. And right now we have far more negative catalysts, so we're going to respect those.
It was just a week ago or so, I don't know if you remember when you were on, not on this show, but in the morning, and you mentioned the VIX, that had been quiet. That changed. So in just a week and a half, that totally changed, and it moved through these moving averages already.
That's right. So it changed very quickly. And at the same time, it looks like that 20-day moving average that we had been focused on for the S&P 500 as our other risk metric is now rolling over. And that goes for a lot of stocks from a bottom-up perspective as well. And that reflects I guess, contraction in market breadth or participation. That's made it already harder kind of since late September for folks to take advantage of this uptrend. By no means does this mean this is a bearish reversal, but certainly seems to be the start of consolidation. And if we reference the DeMark indicators, we'd had sell signals arise on the weekly charts, again, since the first time since the April low was established. So for me, that would suggest that this could be actually somewhat prolonged, maybe in the nature of 8-9 weeks. And that's out of line with positive seasonal influences, which really tend to manifest themselves in November. And yet we didn't have the normal seasonals in August, September, early October either. So maybe it's just different this year.
But we don't really have enough time. I can't believe you're thinking below 4 on the 10-year, and gold is going to keep moving. Just give me about 10 seconds on that, Kate. I guess you say yes.
4 has definitely been support. It's a key level it's taken at. That's 367 as the next
367, okay.
And gold, just watch the 20-day. It obviously has very strong momentum, and we can't derive a new upside objective, but I want to stay on the right side of that uptrend.